Is the impact of negative rates on gold?
I think it'll have more people moving into gold. There's no cost to carry. And you're looking for where do you put your money? When it costs you, if you get into a negative yield, you're losing money just keeping it in that spot.
It seems like some of the rhetoric, though, is that when you have a negative yield, that's like a de facto currency war, and the dollar is just going to get pushed higher because of that, and that could be considered a risk for gold in that environment.
I think we're at a point very similar to the period 2001 to 2005, where gold was moving up in dollar terms, but not other currencies. And today we have gold moving up in other currencies, but not the dollar. There comes a point when the confidence is lost, and it starts moving in all currencies. And I think that's near at hand.
For most of the commodity sector, it's supply-driven right now. The dynamics are definitely being driven by an oversupply. What is the case in gold?
There isn't an oversupply. You're seeing cutbacks in production. Production will be flat this year and turning negative. There's no money being spent on exploration, so no new projects. Most of the large capital projects have been deferred. And you're just seeing a rationalization of the industry. So you're not going to have a lot of excess product coming on the market unless a central bank was selling, but most of the central banks right now are buying. Not most of them, but the ones in the BRIC countries have been buying.
What's the relationship, actually a different question, what kind of rate hike cycle is priced into the gold market right now? Because you have a chart of the Fed Fund futures rate versus gold, and they just flip. They're completely inversely correlated. What's gold telling us about the Fed path?
It's saying that we're probably having more quantitative easing coming at us.
But what if that's wrong?
Then you'll lose on your investment. But we've gone for quite an extended period of time of zero interest rates or close to zero interest rates, and it hasn't improved the economy. The governments, not only here but around the world, are saying, look, we're moving the economy along, but it's not happening. And people are saying, where do I put my money right now? The only place it's been coming is the dollar, but there's some questions.
The interesting thing about the industry, too, is as gold kind of struggles to find its footing and potentially the next leg up, companies and oil companies, copper companies, they're just still getting totally hammered. Like, they're going through what you guys went through a few years ago. So where do you see the industry? Like, are we going to see M&A? Are we going to see defaults? Or have you guys kind of washed out all the excess?
I'd say the last couple of years you've seen very large write-downs, asset bases. There's been a lot of rationalization of the industry, cutting costs. All your discretionary expenditures have been cut. We're near the bottom and coming up. I think we passed the bottom already. And I just see it increasing from here. That our industry is, everybody's focused on the dollar price of gold, but they're missing the fact that in many other currencies, gold's at or near their all-time highs.
And if you look at gold prices so far this year, up 8.9%, the best performing commodity in the Bloomberg Commodity Index.
Your target for this year, Rob? Gotta ask.
I'll go back to an old target that we just missed, 2000.
For this year, come on.
Why not?
We've been talking about this for years, you and I.
I got to 1920 and then it backed off, $80.